how amazingly they do it. And I think the most important thing that Buffett's taught us is to be fearful when everyone else is greedy and to be exceedingly greedy. And I would put the word exceedingly greedy purely because that's what defines him. When everyone else is fearful, he goes in with that extra greed. He gets those deals that most people could not. I think the easiest way of explaining that would be in 2008 when the closest to the Fed being the last resort as a lender, Warren Buffett stepped in. The Goldman Sachs deal that he got a dividend yield of over 5 to 6%. He got preferential shares at a lower price. He had a 5 year weighted average cost price that was in the single digits, if not the double digits. And he was able to make those warrants pretty much convertible.
I mean,
That
he wrote
shows that
everything on a piece of paper also, right?
yeah, I think it took him what about I think about 15 minutes from what I remember him saying that it takes about 15 minutes for him to write it down on paper saying these are the terms of the deal. He sent it across to Lloyd Blankfein, the CEO at that time at Goldman, and they had a deal and he was able to put in. When that news spread that Warren Buffett is now buying in to Goldman Sachs, everything seemed pretty clear that the bottom was in for the stock market. He wasn't buying when we were in the shallows of October 2007. He was buying, or 2008 for that matter, but he was buying closer towards March of 2009. That was when we actually bottomed. The '08 crisis actually bottomed in '09. And that's something we must remember. The 1929 crisis that everyone talks about, the stock market bottomed in 1932. But that's something that we at Signal and Sentiment are clear about. We want to talk about history of investing and we want to see everyone grow into investing. But you need to know what happens in history as well. You can't just look at the past 5 years. And I know Nikhil and we were talking about it, but everyone's just been a 5 year trader or investor. Most people that we know have gotten into investing, especially pretty frequently. And they all don't look up to Warren Buffett because of his time horizon, because his time horizon is pretty much their lifetime. What do you think about that, Nikhil?
That's quite true. And before we get into that, just something that Sean said, it reminded me of something, right? So he basically wrote that deal down on paper, and I was just thinking about this. And there are firms and people out there with four monitors and still underperform the S&P. So maybe more screens don't equal to more gains, but just
Yeah.
maybe.
And I don't
So yeah,
even think
just
he has a screen in his. I don't even think he has a screen in his office. I know his head
yeah,
trader Mark has a Bloomberg, but I think he makes sure that he doesn't keep a screen next to him. I think the
yeah,
closest he's got into a screen, what he says, is the Google search engine.
yeah. So it looks
But
like there's some inverse proportionality there. But yeah, just to just add into what you said. So yeah, I think a lot of people started trading post COVID. So their understanding of the markets was probably during the best time ever. And like they say, everyone's a genius in a bull market. And I also felt like a genius during the bull market.
yeah,
So,
I
but
think
yeah,
we all feel that. I mean, we all think we can't go wrong, and that's the bull market misconception that everyone's in. That if we're a genius in a bull market, we'll easily be able to deal with a bear market, and I think that's
Yeah,
the that's
but uh, I remember when 2020 happened, and then everyone was just selling stocks. Everyone's just worried that, it would be a zombie apocalypse. And then you were the one that said, oh, you know what? Maybe it's the right time to, I mean, not immediately right after COVID. I'm saying like maybe 3 months after when COVID started, or 2 months after COVID started, you were like, hey, maybe it's a really good buying opportunity because you had companies that were brilliant, but they were just being sold like no tomorrow. You look like even companies after the boom from COVID also started picking up, right? You had Meta that fell all the way to what, $80, more than $80 because
yeah.
people were like,
I think we had bought it. Sorry, but we had bought it at about $89.
yeah,
That was the 2022
that's when people
October
started calling
crash.
him a lizard.
Yeah,
They're like, oh, they're like the metaverse is fake because he was
if
spending
lizards
what,
can
10
make you 10
billion.
times your money, I think it's worth investing in lizards also.
I mean, because they were scared that he's spending billions and billions in metaverse, not realizing that he has a lot of cash. It was just like a small portion, very insignificant part that was going towards the metaverse. And they started calling him, we don't trust the alien and all that stuff.
I remember Nikhil telling me this that even though all of that said and done, these guys were still calling him out on his platforms.
On his
So the only one
yeah,
making
so
money was him.
that's true. And he embraced the meme, dude. He actually embraced the
Yeah.
meme. But yeah,
But
this it
also,
also sorry, and also like just speaking of this whole eternal room thing, I think you also said something about temperament, right? So temperament
Yeah.
versus intellect.
True.
So could you just expand on that? That'll probably be interesting.
I think the actual words that I remember from, I'm going to be paraphrasing, but it was that the most important quality in an investor is temperament and not intellect. The reason that temperament is more important than intellect is if you have intestinal fortitude, which is you have the guts in your stomach to deal with drawdowns, like the drawdown that we have just facing, the one from the Trump tariffs. I think we made a video on it and we should link it up somewhere so that people can see that. But intestinal fortitude and intellect are two different sides. Just because you're smart doesn't mean you have the ability to hold drawdowns. And just because you're necessarily not so smart, you have an average IQ, you could very well be having a lot of temperament in you to hold those drawdowns because, like we've said, volatility is a gift. If you get a drawdown, there's a chance that when the markets recover, you're going to fly through that price that you were earlier at. And when that happens, the only thing that holds you in your place saying, you know what, I know that there's light at the end of this tunnel. When we picked up Meta in 2022, when we picked up Netflix in 2022, at the bottoms or closer to the bottoms. It's not like we knew those were bottoms. But what we said was, if we get out of this, I believe people are still going to watch more of Netflix and I believe people are still going to send out more reels on Instagram. And when that happens, these stock prices are going to be way higher. And that's the light at the end of the tunnel. Temperament is key. I would say, as Buffett says, it's him pretty much. What he says is if you're above average IQ, you might as well sell some of that IQ because it's not really worth it. All you need is a bit of IQ. I mean, you need to make sure you're not in room temperature IQ, but you need to make sure that you're at least 120 on the IQ table, if not more. But you don't need to be Newton at 168 or any of that, because that necessarily is not going to be the reason you make money. The reason you make
Yeah,
money is because you can hold onto these drawdowns and see yourself in those markets when they rip. So you can see a $300 stock go down to 89. And if you have the wherewithal, buy as much as you can. Because when $89 on a meta goes all the way to 500, 600, $700, you're making six, seven times your money at a 6% bond or at a 6% market rate on your cash and savings deposits. It's going to take you I don't know, 100 years to try getting to that without the power of compounding. With the power of compounding, even half that time period. That's 50 years that you could make in 5 years. That is the power of equities. You could make five times, 10 times your money if you are able to deal with drawdowns. You need to make sure you're able to deal with drawdowns. And that's one of the things that Buffett's taught us pretty well, right? I mean,
I
I'm pretty
think
sure, Sean, you would agree with that as well.
I think because I think now people are getting a lot more impatient because you have people flexing a lot of stuff. People want to make 500%. I know people that are saying, "Oh, yeah, if I invest $500, how much can I make?" I'm like,
Yeah,
but when
that's
you
true.
invest, it doesn't matter how much you invest. But what matters, I keep telling them is it duration? It doesn't matter how much you put in, right? I mean, it does to some extent, but if you go with the mindset that I want to put $500 and then make 100% every quarter. I'm like, I want to see which word you're living in first.
Yeah. I mean,
So
that's going to be
now
I think
with TikTok,
that's one of the things. But what you just said is pretty important because what you said is the world that you're living in. The world that today people are living in is the 100, 200 times that they're getting on cryptocurrencies and that they got for a very short period of time. And that's one thing that he says again. That's one of the other timeless wisdoms from Buffett, where he says, don't jump onto every speculative asset just because it rallies or just because it goes up so many times.
I forgot the name of the thing, that emotion that you crave, instant gratification.
Oh yeah,
That's
and I think that's pretty much what they keep saying. And delayed gratification is something that most of us it takes time to build. I'm pretty sure about that. But delayed gratification is basically allowing your profits to continue riding, keep compounding, keep making you more and more money, and giving away that Mercedes today, driving a Toyota Prius today, so that you could buy yourself a Ferrari someday. And you know what? By the time you get to that Ferrari level money, you might not just buy it. You might just continue investing in stocks. That's something that I would be certain when people get there, they realize.
But I think if you heard the I mean, I agree with everything you're saying. I'm just adding a point in terms of you. If you heard what he said just now in his AGM, that people thought he was a fool and he felt like a fool that he missed out on not buying currently. But then he gave a justification long time back that when he was holding airline stocks and he sold
Yes.
it all off, and then 6 months later or something like that, it just flew. They were like, "Oh, he missed the ride. He's not a great investor."
Yeah.
But
And that's them being foolish because what he clearly said is he had so much cash in hand and cash at the bank that if the Fed or the governments were not bailing out the airlines, they would just go and be like, go ask Buffett for the money. And he would have less money to invest. Controlling your risk is the success of investing. It is not 5 and 10 baggers. Controlling your risk matters. I think another important timeless wisdom, and I know Nikhil keeps reminding me about this, is the power of being patient. Is by far maybe some of the most toughest things in this world to do, especially look at Buffett. Over $347 billion in cash. And I know for the past few years, he's been sitting on over 150, 200, 250, 300, 350 almost right now. $350 billion. I do agree. He has a lot of private companies that he still owns. He has a lot of money in equity he still owns. He's paid down a lot on Apple. But to sit on almost 30%, 40% or less of your book in cash, while you see stocks go higher, that's the power of patience. Maybe he would have not been that way if he had a few million US dollars or a few billion. It's size that matters as
Yeah.
well, right?
No, it does.
Like he says,
It really
to a
does.
large extent, right? I don't know if I spoke to you guys about this, but it's a right time to speak about this. Buffett in his 2025 annual meeting did speak about the fact that he let go of a $10 billion deal that could have been on pipelines. Close to that number. Now, this is us speculating, but it could be true. And if it's true, I mean, we're good at what we do. Skechers just got sold to 3G Capital for 9.3 billion, and the stock skyrocketed. The deal was valued at around 10 billion, is what Buffett said. He didn't state that it's Skechers, but 9.3 billion, and he missed out on it because maybe he was like, you know what, something happens, something. But this is what he clearly said. That's the power of being patient and controlling risk. He says even if the $10 trillion did go through, 10 billion, sorry, the $10 billion did go through, be a very small percent of a $350 billion cash and a $1 trillion market. That's 1% of his total market cap that we're talking about. So if he missed that and it went up 50%, that's 0.5% of his account. That's nothing. That's what
maybe
our
I think
portfolios move on an average.
I think maybe he was worried about what would happen the last time he invested in a shoe company, and then it
Yeah.
blew up because we started seeing a lot of Chinese imports coming
Chinese
in,
imports coming in. Yeah, that's
and
true.
then I think he was.
And to a large extent, maybe that's being stopped by Trump right now. So maybe he's looking at that. Who knows? I mean, the Trump tariff video that I keep saying has a lot more that people can learn from. If they actually go down deep into that, they can know the differences as to why Dexter shoes back in the day is not the Skechers today.
They can link it in the description.
Yeah, I mean, we'll pretty much share it for sure. I think
If
another
I
one
quickly
that
just circle back to the whole, you know, the tariffs thing, and I know a lot of people are getting worn out by this constant back and forth of this debate.
yeah,
But in the previous video, we spoke about a lot of fund managers coming out and talking about the whole sell America trade, right? And just for viewers, I'm sure 99% of the viewers know this, but essentially the sell America trade basically means all three asset classes essentially going down, right? Which is your equities, your yields going up, and essentially,
your dollar when
the
it
dollar
lets
going down.
crashing.
And that's true in the short run that is happening. But I think in the recent press conference Buffett had, sort of, if not double down, he still held his stance on US exceptionalism, right? So I think he said something on the lines of, I would choose to be born here again.
Yeah.
And it's the best
And he won the
opportunity that
ovarian
people ever
lottery.
had.
His
Yeah,
words
he
were,
keeps saying that.
if you're born in America today, you have won the ovarian lottery. Because he said if he was born in Bangladesh, he doesn't know what he would be doing. Because there was not a need of financial investment managers in Bangladesh compared to that in America. Now, that's not saying anything against Bangladesh, but the ovarian lottery of capitalism is America.
But
That's
then it's not only that not only that he made a lot of money, but then there was a time when he was young, he used to write these letters, and then he made a ton of money, and then he just quit for 3 years, and he did nothing with the
yes.
cash.
And you know why he quit? He purely quit because he thought valuations were too high. That's the power of waiting, the power of patience. You believe prices are too high. You close down your partnership, you sit on the side, and you wait. How many of us are going to be able to wait for 3 years without
For
investing?
3 years.
3 years. A lot of people these days have been 3 years into stock market trading. He's been sitting out for 3 years of a 60-year career.
And it's sort of important to differentiate that just because he sits on the sidelines, it doesn't mean that he essentially does not believe or is not optimistic about American companies, right? So he wants to get in when the time is right, and that's probably what this is probably why he still believes in U.S. exceptionalism.
That's pretty much being also a timeless wisdom. I mean, I would say that's his third timeless wisdom that we would speak about. The first one being the power of being patient. Let's say the second one was purely about the fact as to how I think the second one was the power of patience. The first one that we were talking about was his eternal rule that being fearful when others are greedy and being greedy when others are fearful. And the third one that Nikhil Fried pretty much brought up was US acceptance. Do not bet against America. I would say the AI revolution is the best example of American exceptionalism. DeepSeek kept the way it is. The amount of money flowing into American startups, AI startups, and the stuff that comes out. I don't know. I think I've seen more people using ChatGPT today than I would have even imagined that the amount of people using it and those answers that it gives you. I mean, it's something that I run to first before even I could think about going into Google and waiting for Gemini or any of that. So that's American exceptionalism, even though he might not be very gung ho about new age companies and new age technology, but he sure does know that they do come out of America. That's American exceptionalism. I think that's a great point, Nikhil, that you made about the American exceptionalism. And
Can you
that's
talk a
Yeah,
little bit
absolutely.
about
Yeah,
why,
go for it.
like, I remember when he started investing in Apple and people were like, oh, he's new to the party.
oh yeah, that was back in the latter half of the 2010s when Apple was pretty much trading about a $500 billion market cap, give or take 500, $600 billion market cap. But here's the fascinating part. If I gave you Apple today at a 10 PE, 10 price to earnings, I mean, 600 billion market cap, $60 billion net profit, 10 times earnings, not companies with 200 times, 300 times earnings, 10 times earnings. Would you be able to tell me that Apple at 10 times earnings would not grow that much? That was Buffett's play. He was buying it at 10 times earnings. And that's what Charlie Munger clearly said. There was no thinking about Apple when it was at 10 times earnings because the iPhone is as close to you. You might just give up a portion from your life, loved one from your life, but not your iPhone. That's how important the iPhone is. And he put in a large chunk of his money, close to $50 billion at that time. That's a 500 billion.
And
He's
when
made
people put
about
him
six
full,
times his money. Yeah.
they were like, oh, he's slow.
They clearly said it that he was never a part of the technology revolution. He never invested in tech companies. Granted, he must have not bought Apple, he must have not bought Google, must have not bought Microsoft at their times. The guy made over $200 billion just on Apple. Maybe even more, maybe quarter trillion on Apple. But he has
Yeah,
the
and also,
humility in
yeah,
2025's Berkshire Annual Meeting to come out and say that the only man that would have made him money more than himself for Berkshire was Steve Jobs. Now that's saying something about humility. And that's one of the wisdoms that I would pretty much come in where they keep talking about intellect not being that important, temperament being important, but the largest part is the integrity with which they have.
Yeah.
And Nikhil, I'll get back to you, but this is very important because the integrity part is so important purely because what happened at Solomon Brothers when they had an entire scandal
Wow.
and Buffett was to pretty much come in for a testimony while facing
Mm.
senators. And he used these words that, and I'm again paraphrasing because it's a long time ago, but what he said was, you can lose money for the firm and I will be okay. Completely okay with losing money. You lose a shred of integrity, a shred of reputation for the firm, and I will be ruthless. That's what separates men among boys. That's why he's at 60 years of investing experience, and most people in their 20s who've lived for 20 years think they can do better.
yeah, because you know what they do, right? So I think we've all been through this, maybe at very early stages of our investing career, if you could call it that. Essentially, what people do is they look at the best year that they had, and then they go to compound interest calculator, and then they extrapolate those returns over 10 years and be like, hey, guess what? I could potentially be a billionaire.
Yeah. And it's easy when you just draw it like this because
Yeah.
who's going to live through this? And
Yeah,
I would say, you know
because
what, January 2025, you could draw this line and be like, yeah, it's going to happen. And April 2nd to April 8th, this line was here. It wasn't going up. So that's pretty much something that you would have to deal with. And that's what they say. Buffett clearly comes out and says in one of his lines, he says, when the water goes away, again, we're paraphrasing, but if the water does move away, the tide goes away, you will know who's swimming naked. And that's important. That clearly means it's in times when you have a drawdown, how do you react? When the markets fall, your stock prices are in the red, your portfolio is in the red. How do you react? Do you have the guts to buy in or do you pull out? And when you do sell all your investments, that is the difference between someone like a Buffett who says, you know what, his clear words. I mean, it was fascinating to see him in 2025 come out and clearly say 15%. And you thought that was a bear market? You thought that's a fall? That's normal volatility. If you can't deal with the 15% volatility, you're in the wrong business.
yeah,
It's
that's
just
true.
beautiful the way he said it.
Yeah, so again, well, this is we're sort of having a continuing theme from the previous video also. So I think he also had some things to say about trade and China, and while things are not business
But
as
yes.
usual. So what's he had some insights, right? So could you like sort of expand on that?
So one of the beautiful things that he did come out and say, and which makes us all a lot of us think, is he's saying, do not use trade as a weapon. Never use trade as a weapon. It's the reason that America has gotten to where it is purely because of cheap labor in Vietnam, cheap labor in India, cheap labor in China. No one in America today wants to go down to factories to be building sneakers. They want to continue innovating with AI, with open AI, with Anthropic, with everyone else that's there at Microsoft, Google. None of them are now going to be creating sneakers. And I
Yeah,
think that's something that people need to realize because even the administration realizes that. That is clearly something that everyone needs to realize that now with the pivot, the Trump tariff pivot, the one that we spoke about in our video, is clear that it's bullish. And now Trump's pretty much coming out himself and saying that, oh, a big announcement is coming. These are signals to you that they are no more bearish on the economy because his words, a big announcement is coming. I can't tell you what it is. It's coming in a few days, but it's positive. It's not negative. I have to tell you that. That's his words. So he's saying he's coming with a positive announcement. Could be a trade deal, could be a ceasefire, could be a nothing burger. But it's the
yeah,
sentiment that matters. And you take signal from that sentiment and make your investing decisions. It's important. That is something that's pretty much important. And I think what Buffett came out and clearly said in his annual meeting, and he's been saying this over the years, it's not just this time. He's been saying that American exceptionalism, like the point four on the eternal wisdom that we talk about from Buffett, which is the power of American exceptionalism, is tied to point five, which is basically saying the trade tariffs that's happening with China are not great in the long term or the short term. America has gotten to where it's gotten because it's been able to use trade to its advantage. If you use trade wars to your advantage to tax countries more, to tariff them more, to halt trade, it is going to hurt you as well. And the thing is, you might want you might want to get a better deal for which you might force the country into a recession. But if you do force the country into a recession, you're not going to be able to bring it out very easily. It's a mindset change that happens. That's the most important thing. And that's something, I mean, I think one of the most important things, I mean, coming back to the five things that's there, the power of patience, the amount of times when he tells you to be fearful when others are greedy, the power of American exceptionalism, the amount of times keeps coming back to saying that trade is good for America. The war, the trade wars with China, they're not good. Those are not something that's practically important. I think this is one thing that Charlie says is that integrity is priceless and you must intend on keeping yours. You will be tested in your life to do things which are against your conscience. Stick to your conscience, even if it means short term pain. But that's important because one of the things that he spoke about is integrity is priceless and he intends on keeping his. And let's just come back to the story that, Warren Buffett, he pretty much puts down his shoe and basically says Greg Abel will take over. And that's succession planning at its finest. I mean, I have not seen such kind of succession planning in a while that's happened. I mean, he's 94, but he can sit through 4 hours of answering questions. I know a lot of 49-year-olds that might not be able to do that. But at 94, he's able to do that. That's a mark of respect. And I would say pretty much, I think Sean and Nikhil agree. I think all the viewers should basically list down what they've learned from Buffett. Maybe put it into the comments. Maybe we'll reply with a few more of our wisdom in the comments, maybe few in the description. And don't forget to subscribe, like, and comment for any sharper insights from Signal and Sentiment. Right, guys, do you guys have any final thoughts that you would want to put through? Or are you guys just waiting for the Fed meeting?
Yeah, I think I was just about to say, I think we're all probably looking forward to what happens tomorrow.
It's
Yeah,
going to be
so
fun.
we're definitely going to cash out for another call, maybe as soon as the meeting's over. And then we'll try and get our thoughts together and put it out.
Yeah. I think it'll help a lot of our viewers as to what our thoughts exactly are about the federal meeting. Because a lot of people also have been getting it on an inverted basis. And like we say, invert the sentiment, figure out the longer term, and invest in the short term. Take care, guys. Sean, anything from you?
No, nothing.
Okay, perfect. Great, sir. Great. Have a good night, guys. Take care.
See you guys.